Hi there, my name is Eli Gillespie, and I am the owner of Gillespie Insurance Services in Redlands, California, and I'd like to talk to you about workers' comp. This is the basics of workers' comp, the frequently asked questions that we get. I'd like to go over the top 8 questions we get and answer them for you. Okay, first question, what is workers' comp? What does it cover? Well, workers' comp is actually a pretty simple policy. It essentially covers primarily one thing. That's injuries and illnesses sustained on the job. Okay? Your employees get ill or have an injury, the policy pays for it. It pays for medical, it pays for disability, it pays for rehab, it pays for death. It pays for all these things, and it also pays for lost wages. So while your employee is out on disability from a workers' comp injury, the policy will pay or can pay your employee's injuries. I'm sorry, your employee's wages. So one thing that's kind of interesting about this coverage is that it's unlimited. Workers' comp does not have a cap on how much it'll pay for any of these things. So you can see how that can be quite an interesting policy with unlimited payout. But some of you are probably looking at a policy right now and you're saying, wait, I see a limit. Please tell me about this. What is this? Why do I see a limit? What's going on? So I'll address that elephant in the room. Here it is. So here's a sample declarations page on a workers' comp policy. And 3A is where we have the workers' comp insurance. This is where it says we cover employees' injuries and illnesses sustained on the job. And 3B is this part with a limit. I've highlighted it already. Employers' liability insurance. These are up to, this particular policy caps it at $1 million for bodily injury by disease and accident per each accident, policy limit, and each employee. So this is not directly paying for employees' injuries. This is for things that occur as a result of your employee's injury, outside the scope of the injury, but nevertheless arise because of your employee's injury. I'm not going to get into detail on this because it's not used very much, and we could do a whole video on that, but I just wanted to address it because here I'm telling you that the policy is unlimited, and then I showed you this, that there actually is a limit somewhere and what it's for. So hopefully that helps. Question 2 is, who has to get workers' comp? Great question. Any business with employees has to have workers' comp. It's that simple. Whether they are full-time or part-time, seasonal or temporary, or a day laborer, you have to have workers' comp for these people. The good news is if you have a comp policy in place and you pick up a temporary worker or a day laborer, or you decide later you're going to have seasonal employees, they are automatically included on your workers' comp policy. So that's kind of nice. There's one major notable exception to who has to have workers' comp, and that is in California, there are 5 contractor classifications that whether you have employees or not, you still have to get workers' comp. So when you have to get a policy without payroll, we call that a zero payroll policy or a ghost policy. And here are the class codes, the licenses of those who have to have workers' comp. Okay, so here it is. These are people who are exempted from workers' comp. This is a cslb.ca.gov. You cannot file an exemption from workers' comp if any of the following conditions exist. And we'll skip to the third one. That is, you hold a C8 concrete license, a C20 warm air heating, ventilating, and air conditioning license, a C22 asbestos abatement license, the C39 roofing license, and lastly, the C61 or D49 tree service license. Okay, so these 1, 2, 3, 4, 5 licenses, you have to have comp even if you have no employees. This has been in place for roofing for many, many years. It's these other licenses that got added recently. Okay, so that's the big exception. Even if you have no employees, you're legally obligated as a licensed contractor in these classes to get workers' comp. Okay, number 3, are independent contractors covered by workers' comp? Well, no, they're not. Independent contractors are not covered under workers' comp, only employees. The confusion arises when we're dealing with a gray area. That is someone that's working for you or doing a service for your business, and you're not sure if it's an employee or an independent contractor. Is it an employee or is it a subcontractor? If it's truly an independent or subcontractor, you don't have to pay workers' comp. So how do we determine? It used to be the 1099 was the way to tell if someone was an employee or an independent contractor, but that's not the case anymore. There's a law in California, AB 5, which makes that determination as to who is an employee or who's an independent contractor. And the main thrust of it is control. If you, the employer, the business owner, control the work that the person in question does, if you control it, generally speaking, that's going to be an employee. If they control the work, you don't tell them how to do the job, they don't even know how to do the job, they are more likely to be an independent contractor. So there are a couple other factors to this, but that's the main one. AB 5, look it up. That's how you can tell if someone's an independent contractor or an employee. Okay, next question is 4. Do owners have to cover themselves on workers' comp? If you own the business and you get a policy for your employees, no, you do not have to cover yourself, thankfully, on workers' comp. Now, as a sole proprietor, if your business is a sole proprietor, automatically by default, the owner is excluded. The sole proprietor is excluded. Every other entity, that would be LLCs, partnerships, corporations, owners and shareholders are automatically included. But with a signed waiver, you can exclude the owners and members and managers and partners. Likewise, on the sole proprietor, where you're automatically excluded, you can sign a form to include yourself. Now, far and away, most owners do not cover themselves on workers' comp. They elect to save money and exclude themselves from workers' comp, because they know that if they file a claim, that could potentially raise their rates significantly. That can increase your XMOD. What's an XMOD? Great question. Question 5. What is an experience modification? For short, I call it an XMOD. Some people call it an EMOD. It's an experience modification. What that is a credit or surcharge expressed as a percentage that follows you, the business owner, wherever you go. Doesn't matter which insurance company you're with, that XMOD follows you. Okay, so you have to qualify for an XMOD based on your size. Okay, your state's governing body determines whether you qualify. They run a test. In California, it's the WCIRB. In other states, it's the NCCI. They run a test and they determine if you qualify for an XMOD. If you're big enough, you qualify, you get the XMOD. So the way that governing body determines whether your XMOD is a discount or a surcharge is by primarily 2 factors. One is your payroll, and the other is your claims history. Okay, so payroll and claims. If you have 0 claims and you have payroll, that you'll be getting a credit XMOD. If you maintain 0 or low claims and your payroll goes up, your XMOD will probably get lower. Okay, now if your payroll drops, you still get the XMOD as a discount, but not as much. If your claims goes up now and you have low payroll, just enough to qualify, you're going to have a high XMOD. The higher your claims, the higher your XMOD. Increased payroll will offset it a little bit. But if you have claims, you're probably going to have, you're more likely to have a surcharge or a debit XMOD. The higher your claims, the higher it goes. It can go up very high. And it can have a debilitating cost on your policy. So even if you sell the business, the new buyers, they inherit your XMOD. If you shut down your business and start a new one yourself so you can avoid the XMOD, don't even try it, because the XMOD will follow you. The state's bodies have determined ways to get around people trying to avoid an XMOD. Very difficult to get rid of an XMOD. So number 6, how do you pay for workers' comp? Well, policy, it's an annual policy, and you can pay for it annually upfront. You can pay for it typically in monthly installments or quarterly installments. It's based on a payroll estimate. Okay. So there are ways to mitigate the cost of an erroneous estimate. Okay. One of those ways is through monthly self-reporting. Okay. So that would be where you report your payroll each month, your actual payroll. You log into the website and you type in your payroll and it multiplies it by the rate, and then that tells you how much you owe. So that's one way to do it. And that will offset, if you have high payroll, you pay higher premium. If you have low payroll that month, you pay lower premium. So it offsets those costs, and it helps you later on down the road in an XMOD, in your final audit. It helps mitigate the chances of a wildly disparate payroll from your estimate. So there is also payroll service integration. That is the same as a monthly self payroll, except your payroll service reports the payroll for you. Okay, so it's payroll integration. It's a nice system. You have a payroll service, you have a workers' comp, you get those two connected, and then they do the estimating, they do the reporting for you. Very convenient. A lot of people like it. And then there's also a PEO, which is where it's sort of the same thing, but the PEO is this body that is all encompassing. It's the payroll, it's the tax, it's the workers' comp, and so you don't report anything. They just handle it all themselves. So it can be very nice, and there's no final audit in those situations, those PEO situations. So, when do you want monthly self-reporting? Well, that happens that's a good idea when you have fluctuating payroll, or you don't know what your payroll is going to be. You're a new venture. You're just not sure. That's when a monthly self-reporting can be very nice. Okay. Like if you have a lot of payroll in the one quarter and low payroll in the next, the monthly self-reporting can be good for you. If you know your payroll is increasing, but you're not sure how much it's going to increase, monthly self-reporting. If it's decreasing, same thing. Those are nice times to have monthly self-reporting. Okay, next is, what is a final audit? Okay, final audit is at the end of the year, the workers' comp company, they true up your estimate. Okay, so if you did a payroll estimate, you paid a fixed bill. At the end of the year, they say, okay, great, you told us you had $500,000 in payroll. What did you really have? Send us your payroll reports. And then you send it to them, and if you had greater than what you estimated, they'll invoice you for that difference. If you had lower than what you estimated, they'll refund you the difference. So final audits are guaranteed on a workers' comp policy. You're always going to get them. If you don't get them, consider yourself lucky, or it's a mistake, but always depend on getting a workers' comp audit at the end of the year, even if you have monthly self-reporting. Some of the issues that arise, maybe it's not an error. Sometimes you have an error in reporting, and that's what the final audit will fix. But other times it's not just numbers that you reported wrong, it's classifications. Maybe you put people in the wrong classes. At the end of the year, you determined you misclassed them. Maybe you weren't sure if you were supposed to report PTO or bonuses or housing allotments, things like that. Some things are considered payroll and some things are not considered payroll. And maybe you, the business owner, aren't sure. And so when you report it erroneously. The audit will fix that. Okay, so next question. This is the final question. Question 8. How much does workers' comp cost? Well, this is going to be a little bit of a mini workshop because it's very hard to just give a cost on comp. There are a lot of factors. So let's take a look here at what a policy could cost in a given situation. Okay, so this hypothetical is going to be a restaurant. So we're going to say restaurant. Here's our restaurant workers. And this particular restaurant, they have an administrative staff that works in an office separate. They do bookkeeping, HR. So we're going to call them clerical office. Okay. So the class codes, this is California class codes. 9084 is restaurant, and the rate is 2.59. 9084, rate is 2.59, the pure rate. Okay. Then we have our clerical office, that's class code 8810. The pure rate is 0.21%, 0.21%, and that's 8810. Okay, so now in this hypothetical, we have $500,000 in payroll for the restaurant workers, and we have another $500,000 for our office workers. And you see here, we have a rating factor of 1.5. This is just an estimate as to how the insurance company is going to take the pure premium rates and create their own rates out of the pure premium rates. Okay, so in this case, the company is charging 50% greater than the pure premium rates to establish their base rates. Okay, so for the base rates, we have $19,425 for our restaurant workers. We have only $1,575 for our office workers. Look at that giant difference. Same payroll, massively different premium. Okay, so the total at the end of it is $21,000. Now, the carrier can also apply credits or surcharges. Well, let's just say in this case you have no claims. They're going to give you a big fat 40% discount. Okay, so that drops $8,400 off your policy. Now you're at $12,600. Now let's say you don't have an XMOD. Well, that's the end of it. XMOD 100% is the same as no XMOD. So your state assessments are your taxes. And in California, it's roughly 3.2%. That's another $403. Now your premium is $13,003. Okay? Okay, that's one example. Now let's say you have an XMOD. Let's say you have a high XMOD. Because 3 years ago you had some big claims. Let's say you have a 125 XMOD. Okay, so that adds 25% on top of this 12,600. Now you're at that'll add 3,150 premium. So now you're at 15,750. You have your state assessments of 3.2%, 504. Now you're at 16,000. Just maybe you have a really high XMOD. Let's say you have a 180. Okay, that added 10,000. Now, if you have a 180 XMOD, good chance you're not getting a big fat discount because you've had claims. So you're less likely to get a discount. Let's just say you have a 25% surcharge. That's $5,000, $250. Now, on top of that 180, now you're at 48,000. So this is for real. You can see a $21,000 policy after credits and surcharges and XMODs and assessments can swing pretty high, up to 48,000 in this case. We'll go back to the low. Let's say you had a great XMOD, you're at 65%. I mean, wow. It's all about claims in this case. Claims took you from 21,000 to 8,000 roughly, or 50,000. That high, and these are all realistic scenarios as how your policies can swing. Boy, what if you made a mistake here? Half of your office workers are actually part-time as cashiers, so you need to change this. You're really at 750. Same circumstance, instead of being at 8,000 something, you're at 12,000. That's a $4,000 swing. What if you have no clerical, $1 million payroll? 15,000. Okay, apply those surcharges and you can see, apply these as surcharges and you can see how much it can swing. So this is just an example. I mean, we could go a lot of different ways, a lot of factors on this relatively simple policy. There are a lot of rating factors that can swing wildly and make a big cost difference on your policy. So there's one last bonus question, and that is, how do I get a quote? Very simple. The way to get a quote is call us. Okay, so here's our website. You can input onto a form to get a quote right here, fill it out, and we will contact you. We'll ask you a few more questions, and we'll come back to you with a quote, which is no obligation. You can take it or leave it. Here's another service center, request a quote. This is a very specific one that's asked for more information. But that's our process. You fill out the information. We'll contact you with more questions or simply a quote. When you look at them, we offer quotes from multiple companies, and we really give you the best that the market has to offer. And you make the decision and decide if it's something you want to do. And there we go. That is the top 8 questions for workers' comp. Thank you for listening, and I will see you on my next video.